Dissolution of partnership. Partnership account is being dissoluted if certain conditions are being met. Example is when an active partner dies, when there's a loss in the profit and loss sharing ratio, when the company is involved with another company, when the company is being folded up by the court order, and other reasons. Now, when the partnership asset is being closed up, that is cessation, we have three accounts that we prepare. We have realization accounts, the partner's capital account, and the cash account. These are the accounts to use to close the books of the partnership business. Now, in the note given, we are being given 7 steps to follow when a business is being distributed by the partnership. The first item there on the step 1 is debit all assets to the realization account. That is, at the book value, the figure you have in the balance sheet at the book value will be debited to the realization account. Now, we are taking a question from exercise 28.2, Essential Financial Accounting. The question reads, Joke and Johan are equal partners in a retail business. They decided to retire and sell their businesses on 31st December 1997. The position of the business was as follows. We have the balance sheet, the capital side, and the asset side. The machinery was sold for 3,000 naira, features for 1,100, and stock for 4,600 naira. The book debts realized 1,800 naira. The creditors were paid 860 naira in full settlements. The expenses on winding up were 64 naira. You are required to prepare the following accounts: realization account, cash account, capital account of the partners. Now, the solution is we have to start with the realization account, in which we are to debit the realization account with all the assets at the book value to the debit side, except the cash or bank balances. Now, from the question here, the first item on the asset side is features and fittings. We have features and fittings. And the amount is 1,000 naira on the debit side. We have plants and machinery, and the amount is 2,000 naira. We have stock, 5,000 naira. There is debtors, 1,900 naira. Now, we now go to the step 2. The step 2 says that all assets realized are put to the credit side of the realization account. Now, the question says the machinery was sold for 3,000 naira. So, machinery, 3,000 naira. Features, 1,100 naira. Stock, 4,600 naira. The book debt, the same as the debtors, was sold for 1,800 naira. That's the step 2 of the question. Then step 3 says that if an asset is taken over by a partner, you should debit the partner's capital account and credit the realization account. Here, no partner take any assets. So we go to the step 4. Step 4 is that you should write the expenses of the dissolution on the debit side realization account. Here, the question says the expenses on the winding up were 64 naira. It's taken as your liquidation expenses. Liquidation expenses, we have 64 naira. Now, another step says that the creditors should be posted to the credit side if you have any discount on creditors. Here, at the balance sheet value, the creditors were 900 naira. But at the question, we are given that the creditors were paid for 860 naira. If you minus 860 naira from 900 naira book value, we have a difference of 40 naira. That difference of 40 naira is a discount on credit. It will be on the credit side of the receiving account. Discount on creditor. That's 40 naira. Now, we have posted all the expenses finished now. We now add up the two sides, the asset side and the debit side and the credit side. Now, the credit side gives us 10,154 naira, 10,540 naira for the credit side, while the debit side gives us 9,964 naira. That shows that the assets realized are more than the book value of the assets. By the time you deduct the two sides, we have a difference of 576 naira as the difference. Now it is a profit, so it will be on the debit side. Now the share of profits. And from the question, we are told that John and Joke are equal partners in the retail business. That means their profits are being shared equally. Now, 576 naira divided by 2 will give us 288 naira. Joke, 288 naira. Johan, 288 naira. The two sides will now be added together. And I have 10,540 naira. 10,540 naira for the two sides. Now, that is the A question, is the receiving account. We now go to the C question. The C has to come before the B, because the second one is to prepare the partner's capital account. Now, for the partner's capital account, from the question, the capital account of Joke is 6,000 naira. Capital account will be on the credit side. On your balance BD, for Joke, we have 6,000 naira. Then for Joanne, we have 4,000 naira. Now, we now put our share of profits. Share of profits, 288 naira for each of them. Now balance the two sides. The addition of the two sides will give us 6,288. Instead of writing balance CD, we write our bank account, because the business is on dissolution. No, there's not like balance CD again. Everything will be recorded to our bank account, what we have in the balance sheet. Now for our bank, we are through with our partner's capital account. When I go to our bank account, from the balance sheet, our bank balance BD is 1,000 naira. That is our bank balance. We now debit all the assets realized. Assets realized will be debited. And the assets realized are, we have machinery, 3,000 naira. Features, 1,100 naira. Stock, 4,600 naira. Then debtors, 1,800 naira. Also, we go to the credit side, where we record our liquidation expenses. Liquidation expenses, which is 64 naira. Then our creditors, we have to pay off our creditors, and our creditors are being paid off. That's 860 naira for the creditors. Now, we now bring out the balance CD. Suppose balance CD are supposed to have, but we be written as bank account in the partner's capital account to your bank account. Now, from the partner capital account, we have Joke capital to be 6,288. while Johan capital is 4,288. Now the two sides we added together now. The credit side is going to give us 11,500, while the debit side will also give us 11,500. That means the business has been liquidated and each person has shared their profits and losses equally. So the partners can now go on their own. Thanks very much.